Another giant just went on a shopping spree, and the latest victim? Yavits Insurance. But this isn't just another random acquisition. There's something much bigger happening here. Hub International, one of the largest insurance brokerages in the world, just swallowed up another company. But why? What are they really up to? And more importantly, could this affect you? If you think this has nothing to do with your life, hold on, because this move could shake up the entire market and maybe even change how much you pay for insurance. Alright, so we've got a big fish swallowing a smaller one. But before we understand the real impact of this, let's take a look at who these two companies are and why this acquisition was no accident. Hub International is no joke. Founded in 1998, this insurance brokerage has spread like a true empire. Today, it has over 19,000 employees and generates billions of dollars in revenue. In other words, it's not just any company, it's a powerhouse that dominates the insurance game. On the other hand, Yavits Insurance is a well-known name in Missouri. Founded in 1921, this century-old company has always had a more local approach, focusing on commercial and personal insurance. In short, they were a big name, but only within their own bubble. Now, the real question is, why on earth would a giant like Hub be interested in a regional company? Could there be something much bigger happening behind the scenes? Why did Hub make this move? Let's get to the point. Why did Hub make this move? What are they planning? Well, if there's one thing these big corporations do well, it's thinking ahead. Way ahead. The insurance market is getting more competitive. Smaller companies like Yavits have something that giants like Hub don't: close relationships with customers and dominance in local markets. And Hub, being the predator it is, knows that buying these regional companies is the fastest way to grow without having to build anything from scratch. And this isn't an isolated case. Hub has been buying up multiple companies in recent years. In 2023 alone, they made over 50 acquisitions. Yes, they're building a true insurance empire, and every new purchase is another brick in the wall that makes them nearly untouchable in the market. This move is genius. Hub doesn't have to spend millions trying to win over new customers, because they're literally buying customers who already trust Yavits. And for Yavits owners, well, a fat paycheck with a lot of zeros probably made the decision much easier. But wait, is this good for everyone? Okay, so far, we understand the game. Hub buys smaller companies, grows effortlessly, and expands its empire. But now comes the part no one likes to talk about. What about the customers? Does this merger actually benefit the people paying the bills? The truth is, when a giant like Hub dominates the market, competition starts to disappear. And when there's no competition, guess what happens? Prices can go up, customer service can decline, and choices start to shrink. In recent years, the insurance industry has been experiencing a phenomenon called market consolidation, where large companies buy out all the smaller ones around them. And every time this happens, prices tend to increase by up to 20% in areas with less competition. Of course, Hub will say this merger will bring better services and more efficiency. But let's be real. How many times have you seen a big company promise that, only for the exact opposite to happen? If you have insurance with Yavits or any other company that could be Hub's next target, you better pay attention. Because what seems like just another merger could actually change your costs and experience as a customer completely. The hidden risk no one is talking about. But there's still a detail in this story that no one is mentioning. And it could completely change the game for Hub in the coming years. So far, Hub seems invincible. They're buying up everything in sight, expanding like an empire, and dominating the insurance sector. But, what if I told you this strategy could end up being their biggest mistake? Because there's one major issue that every company growing too fast eventually faces: the snowball effect. The more businesses you acquire, the harder it gets to integrate them, manage costs, and maintain service quality. And it's not just me saying this. A Harvard Business Review study found that over 70% of mergers and acquisitions fail to deliver the promised value. In other words, many of these purchases end up becoming financial time bombs. And there's another risk. Regulators might start keeping a close eye on this aggressive expansion. If Hub keeps buying up everything, they could attract the attention of U.S. authorities and end up facing antitrust investigations. And if that happens, the game could flip completely. At the end of the day, this Yavits acquisition could be just another step toward Hub's total market dominance, or it could be the beginning of a crisis they haven't seen coming. What happens next? And now that you know what's really behind this merger, the question is is this just the beginning? If Hub keeps acquiring smaller companies, they might end up monopolizing the industry and reshaping the insurance market completely. But there's also a chance this whole plan backfires. What if customers start realizing they're paying more for less? What if regulators decide to step in? Hub's future might be way more uncertain than it looks. So, what do you think? Is Hub's strategy going to revolutionize the insurance market, or could this be the start of a massive downfall? Let me know in the comments, and don't forget, if you want more videos like this, hit that like button and subscribe to the channel. See you next time.